I know there are other competing priorities in your life, particularly maybe Bake Off for those who are interested in the kind of kickoff of that coming up this evening, which me and my family will be enjoying. Pleasure to be hosting today. My name's Simon Holden. I'm one of the club execs in Digital, a club in London. Some might say the best club, but that's not for me to say. Today you will have seen that we will be recording the session, so if you have no wish to be part of that recording, please just change your name on the on your video stream and turn your video off. We will be sharing the video with you all afterwards if you'd like to kind of review and reflect on it. For questions, please do add your questions in the chat function. And then I will facilitate with Craig asking those at the end of the Q&A, the conversation I have with Craig to start with. So, told you who I am. A big welcome to Craig. Craig, one of long-time clients for Digital. Craig has got a very illustrious career. As I was reading it and trying to prepare for this, it made me feel somewhat inadequate. But Craig started on the strategy consulting side over at Oliver Wyman and then McKinsey before moving in to telco with T-Mobile and Vodafone, all the while being a reservist in the British Army and getting to squadron commander, and then moving into the payments and the financial services side, most notably chief exec of Faster Payments. So it's great to have you with us, Craig. Thank you very much indeed. I think the key question I'd like to kind of kick off with is just a simple one. In a couple of minutes, can you summarize everything you've learned in the last 15 years in mobile telecoms and tell us how it applies to your current industry, banking and payments?
Well, hi, Simon, and hello, everybody else. Thank you for joining us today. But before that, I need to decode what illustrious. Doesn't that mean I'm very old, I think?
Experienced.
Experienced, yeah, that's a better way. So there are clearly parallels, and I think to use the cliche, I think sitting in banking and payments today, I feel like I've seen this movie before, and that movie was the telecoms, and particularly the mobile telecoms industry. A bit of background: I joined that industry in the late 90s. It was a vertically integrated industry. There was competition, but it was controlled by essentially the mobile operators. They had some sort of argy-bargy with handset manufacturers. Nokia had some power there, but generally all the services you could buy from, say, a Vodafone or an O2 were provided by Vodafone or O2. It'd be the Vodafone voice service, the Vodafone text service. And for those of you of a certain age, you may even remember the multimedia messaging service or picture messaging. And these were all provided by those licensed operators. Mm-hmm. And that had gone on for 10, 15 years and was a pretty profitable business, even with multiple competition. Things started to change in the early 2000s with a couple of things happened. First of all, the development of mobile data services, which is going to be a huge opportunity for mobile operators. You may, again, those of a certain age, remember billions of pounds being paid in license fees to gain access to spectrum to provide mobile data services like 3G and then 4G. But then, and I think at that time, if you talk to an O2 or a Vodafone or an EE, it was all about, well, what extra data services are we going to offer and sell to our customers? So it's a singular relationship. We control the network and the services on top. As mobile data took off, the genie was out of the bottle in some respects, and people started to deploy over-the-top data services, which you could buy independently from your mobile operator. But the key change, and in fact the transformational change, was really the development of the Apple iPhone and then the Android phones from Samsung, and particularly the development of the App Store. And that fundamentally broke up the industry from being essentially vertically integrated to one to where you had mobile operators as providers of commodity, increasingly commodity data service, and then independent players sitting on top, whether they be Facebook or WhatsApp, and many others, millions of others, using Apple's App Store to provide services to their customers. Now, a couple of dynamics happened here. First of all, the competition from mobile operators was really around the extent of coverage, how good's my data service, and then price. There's no opportunity for differentiation. And a huge amount of value started to move away from the mobile operators into a key gatekeeper, the Apple and Samsung Android, and particularly to all those over-the-top players. So you had this breakup. Now that had a number of consequences which we can apply, I think, to banking and payments. First of all, it reduced the profitability of mobile operators and has given them a continually difficult role to play as a provider of commodity. But on the upside, it exposed and initiated a huge amount of innovation in services, to the extent that there's very little you do today that doesn't involve a smartphone in some sense. There's always an app for it. I mean, what was the quote 10 years ago? There's an app for that. It's so ubiquitous now, we don't even think about where's the app, you just use the service. And that has been hugely beneficial for the global economy and lots of other businesses that have been able to exploit that. So that's the story I lived through in telecoms. And one of the reasons I moved from telecoms was because I could sort of see where that was going, and actually being in a mobile operator was not necessarily the most exciting place to be in the future. You then move on to banking. And two dimensions of that. One is payments, which is the particularly interesting, but other value-added services. And I think if we look at the analogies, we've got the same sort of thing happening. It's not happening in an identical way. The drivers aren't identical, but we have this great thing called open banking in the UK, or PSD2 across Europe, and that is separating out payments initiation and access to account data from the provision of bank accounts and those. So if you map what happened in telecoms to what's happening today, you can look at the mobile operators as the banks, the credit institutions of today. And certainly there is the possibility that they become increasingly undifferentiated. And they have a commodity role, which is to keep your money safe and pay a necessary interest rate to earn your savings now. And that's the only competitive dimension. And in terms of services, while they clearly will aim to compete on the services and the value-added services they provide to their customers, just as Vodafone and O2 and EE do today, actually the bulk of the innovation that sits on top of bank accounts and on top of payments will be from third parties. And those third parties would be the over-the-top players in mobile, some of the big players like Google and Facebook, but also millions of other smaller players in domestic markets. In that model, you've got the third-party providers in the open banking world, like Ordo, unlike many others, who don't have to worry about the nitty-gritty of keeping money safe and all the legacy, both technology and business that banks have. That can think about how they deploy services to the customers that happen to be customers of banks in new ways and to drive innovation. And it's an opportunity for people to disrupt, I guess. That's what it's about. So that was a very short answer, a very long answer to a very short question.
Thank you, Craig. Fascinating. Could you maybe share a bit around actually what Ordo is and how it is disrupting them?
Good. Well, that's clearly why I wanted you all to come to this call. It's clearly advertising. Well, what is Ordo? So Ordo, the boring bit is we're an FCA-regulated third-party provider. But essentially, the Ordo service it's got two components. It's a request for payment service that allows billers, and they could be individuals, but they're most likely to be businesses from small to large, for them to send secure requests for payment to their customers. And then the other half of the proposition is a mechanism that uses open banking payments initiation to allow those customers to take that secure request and pay it to their biller in a simple and easy way. Now, if that's the overall structure of what we do, what are the elements of disruption? And there are a few, but I think that the most profound is disruption in pricing, which is a product of a disruptive cost base. The model we have using open banking and faster payments as the underlying mechanism for actually moving money about means that as a business, Ordo has essentially a fixed cost base and a fixed cost per transaction. Whether we're moving a penny for a customer or £100,000, the cost to us is the same. we don't actually handle the money. We initiate the movement of the money from the payers, the consumer's bank account directly into the biller or the business's bank account. So that fixed cost base means we can price our service also at a fixed price and at a relatively low fixed price. We compare that, and who are we disrupting? We're disrupting the bulk of payment capabilities you see today, whether that be credit and debit cards or cash management or checks, where those charges are a percentage of value. It may only be a small percentage, but on larger transactions, that can be quite a significant amount of money. So that's the first thing. We're a disruptive player in terms of pricing based on our cost. The next area of disruption, if you like, is that we've built a design that's end-to-end. We've got an integrated view which meets the needs of both billers who want to be paid and consumers who want to pay. Now, that end-to-end design means we can be highly disruptive in how people attack payment systems. So payment systems today, like faster payments, are very open. Most of the faster payments that a consumer will initiate, and just for some of the numbers, there's about 3 billion of those initiated every year, will be sent to a sort code and account number, which will be provided in an insecure manner. And that insecurity in how you communicate is a fraud vector. Because we built an end-to-end design, because we've got open banking, we can protect against that. We can also engineer against cock-up, if you like, rather than conspiracy, which is in people making mistakes. So we can also mean that consumers don't have to put a sort code and account number in to make a payment. That helps. It avoids misdirected payments. But possibly more importantly, you as a business collecting payment, you want to be able to reconcile the money that arrives in your bank account against the bills you've sent out. And the mechanism today is you put a reference in and you ask your payers, please, 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 and it's normally 3 pleases, will you put this reference into your payment? Yeah. And lots of people do, but enough people don't. The businesses with any scale will have scarily large departments whose job is to reconcile payments, to take payments they receive that haven't got the right referencing or any referencing on, and try and work out which customer sent that payment so they can accept the money, and importantly, the customer's happy that they know they've paid. So that end-to-end engineering design, which we work with and develop, allows us to secure against that. And I guess the third bit of disruption is we can give a better experience to both parties in this transaction. So for the biller, the business, we can give you information about the status of payments. We can tell you what's been paid, what's not been paid. And for the consumer, which is a typical payer, we can give you control and ease of use. What do we mean by control? You decide who you're going to pay. You get information through the auto service which tells you about the payment you're being asked to make. It might be an attached document with an invoice. It could be even a video of services being provided to you, but also it gives you information proactively about the account that you're going to make your payment into if you choose to make it, and the reason for that purchase. And finally, it gives you control of when you make that payment. And if you contrast that with services like direct debit, where you know roughly when that payment's going to come, and you probably know roughly how much it's for, but you're not in control. You have to prejudge when that's going to come and make sure you've got enough money in your account. With Ordo, you're in control. And the other dimension of the disruption is ease of use, and particularly when you compare it to, for example, making an online card payment or making a push payment using faster payments. Both of those require you as the consumer to enter a lot of private and confidential data. If it's a card payment, you have to put the long number in, the expiry time, the good old CVV2, 3 or 4 digit number to secure. You have to provide that confidential information, which in the wrong hands can be used to certainly attempt to defraud you. And if you're making a push payment, you're reading sort codes and account numbers off invoices, you have to put that in. In the Ordo model, we avoid all of that. And as a consumer payer, or even as a business payer to Ordo, we will present the payment that you need to make to satisfy your biller in your bank account with your bank. And you just say, yes, I want to make it, or no, I don't want to make it. You don't have to enter any data. You don't have to remember to put that reference in. And also, you don't have to share any personal or confidential payments information that's yours with either the biller or ourselves. So I think that's really what Ordo is about. It's a different way of businesses collecting money from their customers that gives you a much lower cost, a much greater efficiency, a much lower fraud risk to both payer and to the receiver, and gives a better experience for payers and billers.
Thank you. I mean, that sounds incredibly impressive. Obviously, I'm fully bought in. Very strategic, very planned. But to continue the theme of disruption, I think you launched Ordo on the 23rd of March this year, which was the first day of lockdown. How did that really kind of play through the planning process?
Well, it wasn't really part of the plan. That's fair to say. So I regularly look through our risk register, and I can't actually find the entry for a novel and fatal global pandemic that will close down the economy on launch day. No, we hadn't planned around that. But to use a sort of a flying analogy, I'm not a flyer, but this is I'm saying we were taxiing down the runway. You're accelerating the startup. We've been going for just under 2 years. We'd reached V1 apparently, which is the takeoff speed, and we passed the P&R, the point of no return. So we had to launch, and we launched.
And commendable to you. What happened then?
I think it's character forming, I guess, for all of us. I think the first thing is it's very easy to start blaming external factors and say, well, if only this hadn't happened. But I think, and maybe it's a character trait, it's certainly a trait of the team at Ordo, is we look forward, not back. We try and not fail to learn from things that we don't do quite right, but we look forward and we got agile, even more agile. And maybe we used some of the techniques that we've used when we were partnering with you guys to build a lot of the Ordo platform. Hang on, I've just lost you. I'm just seeing.
Still here. We can still hear you.
Yeah, here we go. Fine.
No swearing. Yep.
So we used the agility that I think was part of our the development cycle we were using with yourselves. More generally about the business and saying, right, what are the opportunities? We're not the strategic plan should set us in direction. Where are we heading for? Somebody's desperate to get me. Somebody else will answer that. We had a strategic plan saying what we're trying to achieve. The challenge is you can't necessarily follow the items like 1, 2, 3, 4. Yep. You have to keep asking yourself, right, we're trying to achieve these goals. New barriers and new challenges have raised. Are there other ways of getting there? And actually run it as a series of sprints which says, right, well, here's an opportunity here. We can go. So for one of the things we did, first of all, is pretty much on the day of launch, we said, this is a proposition which, certainly in theory, might help with some of the challenges that the economy is facing now for people paying for shopping that's been bought by a friend. So we launched a neighbor-to-neighbor campaign, principally to just take an opportunity to get Ordo out there for people who want to use it, and something that was relevant to the time. So we pushed that. We also did some research on direct debits, and one of the features of the early months of the lockdown was that a number of consumers were starting to cancel direct debits. Some of those were services they decided they didn't really need anymore, and they were preparing for economic shock. But also others saying, well, I do want this, but I want to be more in control of my payment. So again, that gave us a marketing and advertising message to illustrate some of the features of the service. What else did we do? Well, you've got to be practical. We're a startup. A lot of it is about managing cash flow, maximizing your runway. And that's about giving you the options to be able to take advantage of opportunities as they arise. And as a CEO of a startup, you can't ignore that. You can't just pretend finance is not an issue. Having said that, I think if the proposition is still sound, and I don't think anything that's happened in the COVID world has in any way undermined the proposition, and arguably, if anything, it's highlighted the strategic importance of this, that businesses are going to be challenged in the months and years ahead to be more efficient. If there's a mechanism for delivering that efficiency and delivering better customer service, then people will want to deploy that. And I guess that the final thing we did is we're part of an ecosystem. We've got a broad ecosystem of clients. We've got a narrow ecosystem of partners like and others. And we were talking pretty regularly, I think, as the pandemic was emerging, saying, what does this mean for our business? What does it mean for our priorities? How can we work together? How can we do this bit of technology, which we now think can deliver a proposition that's more attractive in the current light than we planned to? And that agility that we were using, we found with and other partners to say, there's a slightly different way of doing this. And that allowed us to really try and keep focusing our business on getting the biggest bang for our buck in terms of investments and changes and things we were doing.
Thank you, Craig. Just maybe slight departure and go slightly broader in terms of financial regulation. I'd like to get your kind of perspective on that. Good, bad? Is it necessary, unnecessary? You know, kind of wild card springs to mind in that context. You know, what are your views?
I think regulation is very good. Now, I say that slightly tongue in cheek. I mean, the first reason is our business is, and the disruption that we can apply. You remember we talked about telecoms earlier. Telecoms wasn't disrupted particularly through regulation. It was the growth of that infrastructure and data services. In banking, and banking's been going on a long time previous to telecoms without being disrupted, there is a disruptor, which was PSD2 in the UK open banking. That's a regulatory intervention. In the UK, it was a regulatory intervention put in place by the Competition and Markets Authority to try and solve the very long-term challenge of competition in banking. So our business, Ordo, would not exist, and we wouldn't have attempted to build it without that piece of regulation in place. And I think regulation, although you worry about it as being a dead hand, to the extent it enables competition, that can release innovation for consumers. So I think generally I'm positive. Now, if regulation is ineffective, and I guess when the full post-mortem on the Wirecard issues is completed, there are already questions about the strength of the regulation in Germany and the financial regulator there. I think when things like that go wrong, look at the effectiveness of your regulation and the effectiveness of your regulators, and say what wasn't happening there. So I wouldn't say I'm all for regulation. I'm a little bit of a convert. If you'd asked me 15 years ago, I was definitely stay away, let the markets do everything, let us MNOs as I was then, we can do everything. Now I think I'm a bit more aware. The market forces can be tremendously energizing in lots of places. There are some places where they just fail. They tend to fail where you've got more constraint, where you've got more natural monopolies. And I think there is a place for regulation there. Hence, I'm a supporter of PSD2.
Thank you. Final question before we kind of open up to the floor. And I have got a load of other questions I'd love to ask, which I can do later. But final question from me properly. If you'd known COVID was coming 2 years ago, and you'd be a very rich man if you did, but if you'd known COVID was coming, would you have set off to bring Ordo to market?
Well, that's clearly an unfair question. I think if we'd known COVID was coming, Ordo would have been a business distributing PPE. Other than that, we probably would have gone to start the process of vaccine development earlier. Putting all that sort of superficial answer aside, I think fundamentally yes. Clearly, we might have approached things slightly differently. I'm not sure how. But we have a great value proposition for businesses and their customers that can disrupt incumbents like the card schemes, and we think can deliver a more productive economy with lower costs. So yeah, I think we would. We think UK businesses even more are going to need services like Ordo and competitors that will no doubt come. We're not going to be on our own. So yeah, I think we would have. It doesn't change the proposition or the business model. Yeah, we would still do it.
Okay, good call. Thank you. Fascinating, Craig. There are far more intelligent people on this call than I, so I'm just going to go to the chat function where there's started to be some questions on here. So one from Simon, another Simon, 5G, enabler for the next generation of disruptors or data security challenge, ?
Oh dear, well that wasn't a very sensible question. I mean, I have history here. For my sins, I managed to spend £4,000 million on a 3G license almost exactly 20 years ago. And it was the cheapest license that was bought in the UK market by about £200 million. I've been through 3G, 3.5G, 4G, 4.5G, 5G. I think to the extent we've had the disruption and the enabling, it's around 3G, 4G. And the reason I hesitate, the very first 3G services were really not fit for purpose. They were a bit of a vendor-led fest. They didn't do a particularly good job. They were not very good at carrying the internet. The 3.5G and now 4G, they have the right latency to deliver the services we just assume to use all the time. Is 5G going to be revolutionary? I remain unconvinced at this stage. It's a natural evolution. It will deliver some efficiency. I don't think the industry should be rushing at it. Is it a security issue? I think at one level, no more than 4G, except to the extent that 5G may be delivered in networks in a slightly different way. There may be more software components. That raises greater challenges for mobile networks. But that we're heading into deep tech land here. So.
Thank you, Craig. Good answer. So a question from Amal. So for a startup taking a product to market, dealing with the regulators / FCA is never an easy task. What was your own experience in navigating the regulators? Did you have to take any special approach in particular?
So we know the regulators reasonably well. We know the FCA and the payment systems regulator from the time that the team had when we previously ran the faster payment scheme. So we sort of know that the regulatory space. We had to apply for authorization as a payment initiation service provider and account information service provider. That was a relatively new process, a relatively complex process, and we did take expert advice there. So we had a consultancy helping us just navigate through that. With their help, it was a relatively straightforward process. We did a very good application, and how do I know that? Because we didn't get any questions. What were the challenges? The challenges, we were approaching the FCA at a time when many other businesses were approaching, where the scale of demand for authorization was really much greater than had been anticipated. So the FCA had their hands full acquiring the right skill sets to review all these applications. And the challenge we had was it was very hard for the FCA to predict and then tell us when they would authorize us. But we were authorized without questions, which I think is a testament to the advice we got from the consultants who helped us and the work of the team who put the proposition together.
Yeah, no, I remember vividly that time waiting for that answer to come through from the
yes.
FCA. Yes. Cool, thank you. So a question from Holly. Aside from COVID impacts, would you do anything differently if you were to launch another disruptive startup?
I said a bit earlier that I and I think a lot of the team tend to be forward-looking rather than backward-looking. Now, the risk there is you fail to learn lessons you should learn on the go. I think the answer is probably we would, but it's more about, well, what is the proposition you're taking to market? What is it you're trying to do? And your approach to how you build something, how you go to market, needs to be built around the fundamentals of that value proposition, who you're going to serve, where value is found. And I think there's not a cookie cutter answer to how you launch a startup, but I think it is broadly driven by what you're trying to do for whom and where the value lies. And then I think you tune your approach based on that context.
Thank you. I can see Holly nodding in agreement there. So, crunchy question here from Rob. What's your view on Chinese big tech entering the UK EU payments market from a competition and security perspective?
Well, there are echoes. We keep going back to telecoms versus banking. There are echoes here, and in terms of security, we've had all the issues about 5G security and the role of Huawei in the last 12, 18 months. The reality is that process has been going on for 10 to 15 years. Huawei have been in our digital infrastructure, whether it be fixed or mobile, for many years. And before that, there were challenges with other aggressive countries. Israel is a big technology provider with a very active government security service. You never know quite what you've got there. So I think that the infrastructure questions and about how they might be deployed by another state are an interesting question. Probably above my pay grade.
Cool, thank you very much. Question here from David. Thank you, David. Do you see RTP products replacing directed debit scheme?
So there's a sort of short answer and a long answer, or short term and a longer term. I think in the short term, request products like Ordo and others do deliver a better customer proposition for certain consumers for whom direct debit doesn't give them the control they want, and frankly are being used a little bit under pressure from providers today. So I think there would be a percentage of people who today are using direct debits and finding them really not meeting their needs who will move to request services. I think longer term, there's an interesting question about whether the evolution of request services, particularly where you allow consumers to say, right, send me a request for payment. If this is a regular or recurring, maybe I just authorize you to that payment to be made on a regular basis. And then if my circumstances change, I can untick that and say, well, I'll make the decision next month. That strategically could be a really important replacement for the rather ancient direct debit model we have today, and potentially allow the direct debits to be provided by much more of a competitive market model than a central infrastructure model. So I think there's some interesting stuff there.
Thank you. Going back to Ordo specifically, kind of from Ian here, once you launched Ordo, how are you analysing or managing the data coming through the platform? Do you have a kind of a data feedback loop in place? Or how are you using that?
So I guess think about this in two different ways. Our business model and our approach to business is driven from a privacy perspective. Which means we collect only the minimum amount of data we need to deliver the product, the proposition to our customers. And we also don't use that data even in aggregate in a way that we can sell data. So this isn't a data-driven model. Now, as we're not selling the data, we have to collect our revenues from somewhere. We have a very simple business model, which is we charge the billers for the use of our service. It's a nice, simple, flat rate. But that's how our service is paid for. So the biller pays to send the request. We then keep the data secure between all the parties, collecting the minimum we need to make sure that people can use the service with absolute confidence that there's no either specific or macro analysis going on that they might not be comfortable with. Having said that, we have management information in terms of feedback about how people use the service, which is all part of our sort of product evolution and the sprints in terms of, okay, that thing is not working as well as we wanted because of this feature. Well, that feature is working particularly. We need to emphasize more of that and less of that. So we use management information in a reasonably standard product management model to provide feedback and management of the service.
Okay, thank you. Jeremy, does that, so you've got a follow-on question there. I'm just wondering whether some of Craig's answer has answered that, or is there a kind of, would you like to be more specific in terms of your particular question? Jeremy, you asked a question around the AISP and PISP in terms of do Ordo have access to data in the customer bank accounts?
Well, I can probably answer that.
I'm mute, so it's fine with me. Thanks, Craig.
Hi, Jeremy.
Hi.
So we are both a PISP doing payment initiation. We're also an AISP. We use that to collect the minimum amount of data we need to deliver a secure service and a service that both the biller and payer can have confidence that they are paying who they think they're paying. What we're not using, we're not an AISP that is streaming through your current account statements, drawing out insights about where you spend your money. That's a perfectly legitimate business model, but that's for other businesses to do. Not you. Okay, thank you. Cool. A question that I'd like to ask, actually, in terms of, there was a lot of I noted a lot of activity from yourselves in Ordo on LinkedIn over the last since the launch, and I was just wondering
how effective did you find LinkedIn in building that awareness in terms of what you're doing and attracting customers?
I think there are so in a sort of more narrower sense, both myself and my co-founders and the team, our LinkedIn networks give us a reasonably good reach. We know the people we know, through them we know the people they know.
Yep.
I think that is fundamentally constrained. I've been in 2 industries through my life, so I've got sort of 2 bubbles of connections. It doesn't take you everywhere. Having said that, Joe, who's our head of sales, I think does find LinkedIn a really useful tool about identifying businesses and individuals within businesses that would be interested in our story and who can get value from Ordo. So I think it is important. It's one of these quiet changes in the world that you don't really notice until you realize that you use LinkedIn all the time for finding out about people, from being informed. So I think it is quite an important tool in terms of our social media, and more for small traders. Instagram and to a certain extent Facebook are probably more important tools for us than LinkedIn.
Thank you. I've got one more question, and if no one adds any more to the chat, then maybe it'll be the last. But from your perspective, is there anything particular missing from the current financial regulations? Is there anything you'd like to see come through?
That's a good question. I'm
not going to catch you out.
Narrow it down. Let's focus on payments. The stuff that's entirely relevant. There are all sorts of discussions you can have about all sorts of things. So we use the PSD2, the open banking regulation, and I think we are very happy with the structure of the regulation. I think one of the areas, and this is a product of it being a new world, is the influence of regulators and how active they are in terms of driving change and driving adoption and compliance with regulation. And I guess one of the challenges, and we spent 6 months plus integrating lots of banks through open banking to deliver payment services. And I have to say, my previous prejudices about how big banks would respond have generally been completely wrong.
Yep.
This is a new area. We've had to work with banks to take out features and bugs in implementation. Generally, banks have been very responsive to us, both as Ordo, as a TPP, and also when customers say, well, why can't I do this, or how do I do that? I think one of the areas that is a challenge, and that possibly the regulators need to keep their eye on, is the sort of challenge of new products, which is, you find there's an issue with a PISP functionality for Bank X. Bank X recognizes that and says, well, we need to prioritize that on our roadmap. It might be a change in their backend, it might be a change in their mobile banking app. And they say, right, well, how many million customers are impacted by that problem at the moment? And the answer probably is, well, it's not many million. We're at the early stages of deploying open banking, and if you leave it at that, you risk this asymmetry between the TPPs who are building businesses now and need this stuff to work, and the account servicing PSPs, the banks, saying, well, this is not on my priority to fix. So I think there is a recognition, and this is true for banks' own products where you're launching a brand new service. On some of these things, if you don't give it the priority to get things fixed and working, you'll never build the scale to give you the priority.
Yep. So
that's sort of general thought process. And then for those institutions that are a little bit less focused on making this work, that's an interesting excuse to say, well, we're not going to make that fix for another 3 months because only 100 or 1,000 or 10,000 of our customers are going to be impacted by it. That is a stick that could be used to try and undermine competition from TPPs. So I think having a regulator that can be really sensitive to that dynamic, and sufficiently well educated to understand the implications of that, some of which are quite technical, and push all parties to do what they need to do. And that won't just be ASPSPs, there may be some things that TPPs need to quickly change to deliver a great end-to-end experience. I think having enough energy to push those things quite hard, because otherwise you get an asymmetry between hundreds of smallish, typically startup TPPs trying to deal with some very large banks on some issues.
Thank you. One question has just come in as you were finishing off there, Craig. So from Sham, so going from faster payments to startup, how difficult or easy was it to continue with the Ordo idea and make it a reality, both logistically and motivationally?
So and you talked about my career. I've worked for some big businesses. McKinsey's a pretty big business. Oliver Wyman's a big business. T-Mobile, pretty big business. Vodafone, they don't come much bigger than that. And in one sense, faster payments was a big business, processing, in my time, 2 billion payments a year, a couple of £1 trillion of value going through. But actually, the faster payment scheme itself was, when I started, was 6 of us. When I finished, was 60 of us. And it was only 60 because we were doing the engineering and design work for a radical redevelopment of the platform. So actually a relatively small business. A CEO of a small business like that, you end up learning how to do a lot of stuff yourself. You have huge benefits of not having the diseconomies of scale you sometimes get in a big organization, which is you can know everybody, you can talk to everybody. So I think I learned lots of things in that role with a relatively small business about how to leverage, how to work with the team, how to get stuff out, which was massively helpful in terms of moving to Ordo. And actually a significant proportion of the people who were with me in Ordo were the people who were with me in faster payments. So we went on that journey together. I think one of the reasons for doing Ordo is we saw the capability that faster payments had delivered and was delivering for real-time competitive payments. We saw the impact of open banking. We'd influenced its development to make sure that third parties could fully exploit faster payments. And there was a sort of natural sense, we see a gap in the market which we could fill competitively. Well, let's go and put our money where our mouth is and go and do that. So I think it was in some respects a smaller transition than it might have been if I'd come straight out of Vodafone into that startup environment. So I'd been attuned to some of the things you have to do, some of the wonders and pains of being in a small business. And I'm still the finance director at Ordo today, although I did have a bit of help at Faster Payments. So I think it retrains you a little bit in being a bit more self-reliant and also recognizing there's a huge amount of infrastructure you don't need around you to be effective.
Yeah. Fascinating. I didn't quite have that context before. Thank you, Craig. I think that is the end of the questions that we've got there. So I'm going to say a big thank you to everyone who's joined, and hopefully that's proved interesting. But the biggest thank you to you, Craig, for kind of sharing your story and your insights. Genuinely fascinating. I learned a load of stuff which maybe I should have known before, based on us working together so closely. But yeah, really thank you for taking your time, and we will share the recording of this with everyone before the end of the week.
Well, it's been a real pleasure to have the conversation with you, Simon. Thanks for organising it, and thank you everybody who's been listening in. Last sales pitch, I gave a very short summary. I used no slides. I did no demos. But if you go to ordohq.com, ordohq.com, you can find all about what we're doing, and you can use it yourself. The Ordo proposition is for everybody. So download the app, go onto the web, use our service, and you can start collecting payments using this technology and this service today. And I strongly encourage you to make sure you get to use our service. So thanks.
I cannot beat that conclusion. Thank you, Craig. Much appreciated.
Thanks, Simon. Goodbye, everybody.